Every loan follows the same mathematical path. Listen carefully. If you understand the equation, you will understand the true cost of that loan. Financial mathematics isn't just about solving equations. It helps you make smarter financial decisions that can save thousands of dollars over your lifetime. In this video, I'm going to be treating the topic loan repayment. I'll be giving the equation which I want you to take as a bonus for this process in USD. And every American needs to know this. Pay close attention as you're about to uncover the hidden components of every loan you undertake. Perhaps you are a first timer or you don't really know what loan is. Let me make you understand with clarity. Loan amount, it's the money you borrow. And quickly, let me show you the components of every loan on the screen. When you borrow money from a bank or a lender, you receive money from that bank or lender, but you promise to repay it later. The lender or bank charges you interest because they are allowing you to use their money. Now, component of loan equation is thus. In loan equation, P represents the principal amount. R is the interest rate. T is the time, the duration, the period within which that loan facility will be repaid. You also have M, which is the monthly repayment. Hence, we can say the principal P implies the principal amount of that loan. The interest rate R implies the cost of borrowing. The time T in the loan equation implies how long it takes to repay that loan. Then finally, monthly payment. Monthly payment M in this equation implies the monthly amount paid or the amount paid back every month in course of repaying that loan. Loan repayment equation is M equal to P multiplied by nominator I bracket 1 plus arrow bracket close exponent N all over the denominator bracket 1 plus I bracket close exponent N minus 1. P here is equal to the principal amount. I is equal to the monthly interest rate. N is equal to the number of monthly payments. Guys, let's take a real example in illustrating this. Say, I told you that borrowing $20,000 could end up costing you over $25,000 without buying anything else. Where does the extra money go? We'll uncover this mathematics behind loan repayment using this simple equation. Loan amount equals $20,000. Annual interest rate given to be 6% per annum. Repayment equal to 5 years term. Now here is the question. 1. Calculate the monthly interest. 2. Calculate the total repayment. In order to carry out this, let's consider these few steps first of all. Step 1. Monthly interest. I is equal to 6% over 12 months, which is equal to 0.5%, which is ultimately equal to 0.005. Step 2. Total payment in 5 years implies that n is equal to 5 times 12 months, which is equal to 60. Step 3 is where you now do the substitution into our loan formula to get total amount paid. So recall that our n is equal to p times denominator I bracket 1 plus I exponent n over the denominator 1 plus I in brackets exponent n minus 1, which implies that m is equal to 20,000, which was the loan principal amount, multiplying now in brackets 0.005 bracket 1.005 raised to the power of 60 all over 1.005 raised to the power 60 minus 1. This will give you $386.66 as our monthly payment. Therefore, we can say that every month the borrower will have to pay back $386.66. To answer the second question, which is the total amount to be paid back, here we go. Total amount paid is equal to monthly payment multiplied by number of payments which implies that $386.66 will multiply 60, which is equal to 23,199.60. Therefore, our answer is $23,199.60. So the borrower received $20,000 but paid back over $23,000. Now let's look at the total interest that was accrued on this loan, as we were able to bring out using the loan equation. Total interest paid is equal to principal amount received minus total amount paid, which is $23,199.60 minus $20,000, giving us a total of $3,199.60 as our total interest paid. Pay close attention here, as I'm about to show you some few but very key important financial educative lessons from this video. every loan follows the same mathematical path. Understand the equation and you understand the true cost of borrowing. Financial mathematics isn't just about solving equations. It helps you make smarter financial decisions that can save thousands of dollars over your lifetime. If these lessons helped you understand how loan repayment really works, give this video a thumbs up. Subscribe and turn on notification on this channel. We make financial mathematics simple, practical, and useful for everyday life. I'll see you in the next video. Thanks for watching.